It's Wednesday, so it's time to talk about your money. Mike Giordano, financial advisor for Williams Wealth Management, is joining us this afternoon. Thank you for being here. So let's help people invest. Of course, we know everyone's situation is unique, but in general, what are the things people need to consider when they're getting started with investing?
So true, Gabby. I mean, everybody's situation is unique. I've talked to hundreds and hundreds and hundreds of people about investing, and everybody's financial situation is different. So for your specific needs, consult a financial professional. Let's talk generalities. The most important thing you need to think about are what are your actual goals? What are those dreams in your head about the ideal life that you want to live? Lay those things out there. So we're talking about, I want to buy a car in 2 years, I want to buy a house in 5 years, maybe retire in 25 years. This is looking at your time frame. So time frame is an important component. And then what's your risk tolerance? You know, some people can handle a lot of fluctuations. They can drive that car 70 miles an hour. Other people can't handle going 40 miles an hour. So you got to know what your risk tolerance is, and that helps you guide, you know, how fast you can drive your investments.
And you're talking about goals. Is it true that people kind of need to have a different plan for each of their goals?
Exactly. I mean, it's different. If you're gonna buy a car in 2 years, you don't want to put that money at risk in the stock market by buying stocks that could be all over the place. Look what happened over the first 6 months of this year. You might not have the money to go buy that car. Conversely, your retirement 25 years away, you can handle the ups and downs just fine.
Okay, what about retirement? That's a whole different animal, isn't it?
Well, retirement's tricky because when you buy a car, right, you make this big payment, or you make a big payment, then you have a couple little payments for a few years. Same thing with a house. You're going to make this big down payment. A retirement, you know, obviously we think when somebody's 25 years old, they got many years before they're going to retire. And so it's easy to be a very big growth investor, invest in stocks, real estate, growth assets they might fluctuate a lot, but you can ride that out because you got a 25-year time horizon. But somebody that's 55 or 60, you think, oh, you're going to retire here in the next couple of years. Well, you're still going to hopefully have a 30-year retirement. So it's not just this one-time payment. You need a lot of money. So you still need to have some money allocated to those growth investments that can outpace inflation.
All right, great advice there, Mike Giordano with Williams Wealth Management. Thank you so much for coming in. Good to see you on this Wednesday.